The ECB yesterday indicated it might raise interest rates as soon as next month. Now, does that ease your job as a central bank governor in Chile?
Well, what we have been saying for a long time is that, of course, the two-speed recovery in the world economy is putting a lot of pressures on emerging markets. So as soon as we see a more balanced recovery, that the whole world is kind of following a more balanced monetary policy, of course some of the tensions for emerging markets are alleviated, but still we have a very big challenge, which is inflation.
But one of your issues is capital inflows, of which have been pushing up your currency. So would higher interest rates in Europe maybe ease the force of the capital inflows which are coming from the developed markets?
Just one comment to clarify. It's not a problem for some countries, capital inflows. In Chile we have a current account surplus, we have some inflows, but we have also some outflows, and that happens in many emerging countries. So the problem is that the interest rate differential is putting pressures on the currency, not just through capital inflows, but just pure arbitrage and adjustment in asset prices. So, and of course, closing the gap and the perspective of closing of the gap, of course, will alleviate some pressures on the exchange rate markets.
Now, in January, you put a $12 billion program in place, intervention program in place, to buy the dollars, to take the pressure off the peso. But since then, we've seen the peso appreciating again. Now, has that program failed?
No, the program hasn't failed. The program has been effective. What's happened that there are many other things that are going on at the same time. Our preliminary estimations indicate that if we wouldn't be intervening, the currency would be between 3 and 5% more appreciated.
At the moment, are you happy with the level of the peso? Does it reflect fundamentals?
We do not express whether we have a target or not with the exchange rate. We think that the country as a whole is in an extremely well positioned. From the point of view of the central bank, what we have to do is to control inflation and to avoid the pass-through from commodity prices and food and oil to the rest of the prices. But we see that our economy for the next quarters is in a very good shape.
And under that program, you're buying something like 50 billion
a day.
A day, yes. Would you consider increasing that amount?
We are very satisfied with the way we do it. We think that the big or the most important signal and action that we have taken is the amount of the intervention. Whether what we do on a daily basis is not the central part of the program. So and also it is quite important to do it in a systematic, pre-announced way, so we keep monetary policy independent, and at the same time we are not interfering with the daily workings of the market.
Well, some have said that the purchasing dollars, doing this program while raising interest rates are incompatible. You can't do it at the same time. What's your take on that?
You cannot do that when your objective is an exchange rate level. We do not have an exchange rate level. We are alleviating the pressures, but the way to do it with a sterilized intervention is precisely to keep monetary policy independence in order to gear monetary policy to stabilize inflation.
So what you're saying is that it's still possible that we're going to see more interest rate rises going on in Chile, even as this program remains in place.
That's right.
Thank you very much indeed for coming to speak to us.
You're welcome.